Welcome to Commodities, and here we're looking at gold, and I've got two counts for gold. They're pretty much the same and telling the same sort of story, but this first one here has a 38.2 retracement level, pretty much at the sort of 260 area, so it can be complete here now, and then we see a move lower through here. In both cases, we would want to see the 1250 there as a retested resistance if you're going to short. And this is looking at the pattern here as a triangle pattern here for this wave count to be into place here. The alternative count that I've been working is this one here, where it's not looking at this pattern as a triangle as such. It's looking at it more of an A and a B and a C to this point here, and then a series of waves ones to the downside here. And currently we would be looking at this structure here for wave 1 here, wave 2 to here, and this would be wave 3 and 4 to here, with the 38.2 retracement level is higher at 1266, close to the 1265, the first level of group 2. So while the market is above the 1250 or above, it could spike down a bit here or whatever, but as long as it doesn't test it and find it as resistance. So as long as this market hasn't got the 1250 as resistance, we have to look at this market being higher while it's above the 1250 here. Also, I want to point out that once this wave 4 here is done, we'll be looking down to wave 5 here, but that would be of wave 3 here, wave 5 of 3. And that would be the larger count coming back up this way, with this wave 1 coming down and this wave 2 here. So really we're in this particular count, we're in 5 green waves coming down to make the blue wave 3 here, which would be further down in this sort of area, so still heading down into the 1200 here. So we know there's a lot of support too in the bigger picture, around the 1250 and the 12, all through this area through here, and that would also suit a whole series of waves, 4s and 5s coming into play as well. So a whole lot of sort of bouncing going on. But anyway, let's just see how we go. This can be counted in different ways here, but let's just see how it develops to the upside somewhat. And it does appear to be corrective to the upside, so that's really not the problem. It's just how far will it go. In terms of shorting, we need either the 1250 as a retested resistance, or we need to see an impulse wave, 5 waves coming down from the high here first. Silver, same, slightly different. Once again, it can have its wave 4 high in through here as well, in terms of the A, the B, and the C wave here. However, in terms of shorting, we wouldn't want to short unless we're on this side of the closest largest number, so the $19 here. We'd want to see that as a retested resistance through here. We're reasonably assured that this is a corrective pattern up through here because of the overlapping wave structures within here. So let's just see this play out here as well. This move up through here is not really in 5 waves so far, it's in 3, so it can be part of this sharp move down. Gold's a bit the same as well. This moving up here is in 3, an A and a B and a C wave to here. So this could be down for 1 here, back for 2, and working lower through here as well. So we don't have a count to the upside, we have a count to the downside, but we just don't know if this is finished. It's simple as that. The copper market, the base metals have moved lower, and we're looking basically for a bounce off the $3 mark here, the 300 major trading level, and the market too, because it's approaching these old lows here on the daily, this whole move down here is oversold. So we've got a move that's down, that's oversold. We're at a large number here, so we're likely to see a bounce, and that bounce is likely to be wave 4, pulling back to 307, 308 sort of area through here, perhaps retesting this trend line here. I need to recheck that trend line, see if it's all still intact. Sometimes when you open and close charts, they can move a bit. So look, we're just looking for the bounce here as well. I also understand the move down here so far is in 3 waves, and it can be wave 1 or an A wave, a B, and wave 2 and a third wave down here. So we can have wave C, a low in place here as well, but it does make all this move up through here corrective at this stage, so we're likely to see a wave 4 and a wave 5 moving lower through here. The oil markets, in the morning report here, we've been looking at this move down through here being finished, but we just needed some evidence of some upside, and we didn't do the report because of the Australian holiday. But you can see now that this market has moved up very strongly here, so displaying a third wave here. More, if it was an A and a B and a C here, then the C wave here would be more lazy, so to speak, and struggling. But we can see that this is really strong and has a personality of a third wave, so we would need to label it wave 3 into this current high, or these current highs here, close to the failing to find support on 104.30, the top of subgroup 1, or into the 104.50. But we can expect some type of wave 4 correction across this level here, or just above it, reacting from these highs here, and then another push up into 105 there. The gas market is a little bit trickier. All of this move up through here, we've been counting it as an A and a B and a C wave that can fail from the 472 area here. So we need it to play out. We know that there's going to be resistance through here. If the 472 became the support, well, then we would look at being long. So, but as it stands at the moment, we will be looking at this as an A and a B and a C wave through to here. And yes, it can move higher. And yes, we know that it will struggle at these highs here. It's just a shame that this is not a perfect impulse wave here. If that was the case, then we would have been trading long from the 450. But this leg here makes the rest of it corrective here. So let's just see how we go. I mean, the move down through here is in 3 waves as well, so let's just want to see if the 450 becomes the support. If the 472, sorry, if the 450 becomes the retested resistance, we'll be looking to short from that point. The soybeans is pretty much on track, and we were looking for a target of down into the 1450 area through here. Yes, this market can move lower through here. Let's take a look at this here. So in tracking this down here, in a bit of a nutshell, we were looking for wave 1, ABC for wave 2 here, and then wave 3 coming down through to here, and looking for 5 waves. So wave 1, wave 2, I believe this is wave 3 here with 5 waves in it. Wave 4 is in progress now. We've only had 1 bounce up here, so we may get like a minimum of an A and a B and a C retesting the 470, 38.2 retracement level area before we see any further downside. If you've been short, the idea was to cover into the 450 sort of area. And because we're dealing with 4th and 5th waves from this point, the market can get a bit choppy through here. So the idea was to trade from the 490 area here down to the 450. And that was the little run. So if you've made money, then it's good just to stand aside and allow this to play out. The other point here is that the market is oversold on the daily, so we can see more support come in on this 450 than we may expect it to. The wheat market and the corn market have still got a bit lower to go, but we're still treating this whole move down here as a wave 2 here, and the weekly chart, which is what I'm looking at moment as well, is moving into the oversold area as well. So we're sort of looking for lows in, well, all the grains really, soybeans, wheat, corn, coffee, sugar. So we're looking for lows this week in these markets. So yeah, let's do that. Sorry, I haven't cleaned this up. I did clean it up, but didn't save it. Anyway, look, we were looking for a wave 4 bounce back from the 600 here, and we're looking for a new low to come in place. That said, we know wave 4s can get a bit a bit sideways and complicated, so we end up might seeing 3 swings here before we see any further downside here. So nothing to really do or say here at this point. So and we'll also be looking at new contract months too, so coming into July, so I'll start preparing those charts for all the commodities as well. The corn market, the same thing as well. In its count here, we're looking for wave 4 down to wave 5 and just trying to work out the internal wave structure from this point here, and looking at this now as 1, 2, 3, 4 and 5 for 1, back for 2, and then all the way down here for 3rd, back for the 4th and down for the 5th. And I can see that this 5th wave here is not finished, so we're looking down, still looking at the 440 area through here as well. So we're kind of fishing for lows again in these grains. Let's just not get fixed on that, but let's leave it on the table and let's see what occurs at these lows down here. Coffee's much the same as well. We're still, unfortunately, we would have got stopped out just above the 172 area there, but if you haven't, then we're looking down further at 160 here. The 150 is actually the 61.8 retracement level of the whole move up from 110 up to 220, wherever it was up the top. So we'll be also looking for lows down here as well. If I was to take a sharp shot at this here, I'd be looking at 1, 2, 3, 4 and 5 down into here, something of that nature there, to look for these sort of lows into this area through here. Once again, the weekly chart is also moving into the oversold area as well, quite reasonably deeply, so we can expect lows here as well. The sugar market, just starting with the daily chart here, the $17 here roughly, and the 16.50, the medium level, is the 61.8 retracement area through here. So once again, we may have a low in here as well, but I don't really have enough evidence of a move to the upside here. A little bit of evidence would be support on 17, but more so on 17.30, and also an impulse wave to the upside as well. So we can have a low in here. It just doesn't finish very well down through here. I could count this as down for 1 here, back for 2 here, down for 3, across for 4 and down for 5. That probably fits, but I don't know. And this looks here as an impulse wave to the upside. So just based on this move here, we should see another move up through here. But I want to see if we can get beyond a 3-wave move as such, So, it can be just an A and a B and a C here, and then it could fail from here again. So I just need to be careful about that. That's why finding support on the 17.30 here would be, it's really challenging this, this first move down here or this first move down through to here, and creating overlapping wave structures on this side. So that would put it in a bullish sort of mode there. So it's something that we can look for, and we have been looking for this low to come into place. We may have that too. So it's interesting to see all the commodities perhaps line up this week for lows. Some will be ahead of others, and that's good. There'll be leaders and there'll be followers, and we'll just see. But anyway, let's just see. The orange juice, yes, in a bit of a nutshell, we've got 3 waves here, an A and a B and a C, and therefore at some point we should see this high be taken out. Now we know that at 165 here, which is the first level in group 2, is the resistance, and we'll see resistance there. And a correction. So that's what we're looking for. We're looking for this market to be sold off into this area here, and a correction that will be reasonably shallow before we see further upside there. So long traders will just need to either stay long or exit into the 165 area. Okay, that's it. Just have a quick look at the US dollar. Now with the US dollar, we can possibly have a high in here, and we can be looking for a low, new low coming in, and this would be an A wave, a B wave, and a C wave to here as a rally, and then moving down in terms of down for 1 and back for 2 and so forth. But look, until the midpoint, the 80.50 becomes the retested resistance, then this market is supported, and we don't it hasn't got a the momentum to the downside until that until that takes place. So that's something that we'll be looking for. But while it's sticking to the 80.50 here area, then it's still positive, put it that way. So there's a crack in the pavement, so to speak. Let's just see if that develops to the downside here. So we're just looking for the evidence on turn here as well. And, it may not be the case, because it's really sitting on 80.30. Well, being above 80, first of all, creates a positive bias. Okay, so it's good to have Elliott and the levels telling the same picture and being on the same side. However, in this case, we've got a possible Elliott top here, but the levels aren't telling us that. That's just not the case. So it's still positive from the trading levels point of view in terms of the 80, the 80.30 and the 80.50 here. So let's just see this play out. So don't be sold that there is a top in play here as such just yet. Just a possibility. Alrighty, well that's it. Thanks for listening.